Good afternoon, everyone. Welcome to ISAS Conversations again. We are speaking today to Mr. Vinod Rai, Distinguished Visiting Research Fellow at ISAS and also the former Auditor General of India, on the recent issue of the impasse between the Reserve Bank of India and the Indian government. Welcome, Mr. Rai. As we all know, the RBI and the Indian government have been engaged in an impasse. What was the crux of this matter, and what steps were taken at yesterday's much-awaited board meeting to resolve this issue?
We must get to understand that regulatory institutions like the Reserve Bank of India, a central bank, are created by government for specialized activities that they are required to perform. And they are kept at an arm's length distance from government so that they are able to perform their specialized role with a certain degree of autonomy. Now, the RBI's role basically is regulation of banks. It looks after currency management, and it also looks after controlling and managing inflation within the country. Now, there has always been a certain element of very healthy tension between the Reserve Bank on one side, which is the monetary authority, and the government, which is on the other side, the fiscal authority. The fiscal authority of government is always interested in growth, which means economic development, which means growth of the GDP. Whereas RBI is always concerned with ensuring that inflation is under control, currency management is under control. But in India, the peculiarity of the regulatory powers of the RBI is that 70%, roughly 70% of the banks in the country are owned by government. They are public sector banks. So in effect, the RBI lands up in some ways regulating the governmental control. Now, over the years, what has happened is this healthy tension has been managed off and on by very tactful and diplomatic relationship between the two institutions. This issue just came as a flash in the pan after a couple of hard media references from both the sides. But I must say, to the credit of both the agencies, that once mature minds got into the issue, they realized that they were actually both of them were on the same side of the table. And in the meeting yesterday, all of them took a very mature and considered stand. And the issues that have been resolved is, now for example, the capital framework of the RBI, it has been entrusted to a specialized committee, which hopefully will resolve the problem for years to come. That has never been tinkered with. Number two is the prompt corrective action on the banks. And there, the RBI has given the banks some more time to be able to resolve the problem. But a bigger issue, when I think it's a very genuine issue, is that MSME units within the country were facing a kind of a liquidity crunch. For them, I think the RBI board has come forward and created a scenario in which liquidity will not be an issue and they will be able to restructure their accounts as long as it is within 250 million rupees. So I think that's a very appropriate and very encouraging decision that has emerged in the board meeting as of yesterday.
Thank you. So some of these measures, including the capital injection, as well as you alluded to, the expert committee being set up to decide on the economic capital framework. Now, some commentators have come out to say that this may not be as effective because it might take a long time and also might have an impact on the capital markets going forward. In your view, how effective are some of these measures?
See, as I just mentioned to you, the economic capital framework is an issue which doesn't have to be resolved immediately. But it is an issue which needs to be well thought out and structured so that it withstands the test of time. See, we must understand that governments come for 5 years' time, in which they have a certain agenda which has to be fulfilled within the 5 years. But the RBI thinks on a longer term perspective. And the economic capital framework is an issue which has to factor in a longer term perspective. And that's why I think it's a very healthy development for them to have set up an expert committee. They have not nominated the members as yet, but that expert committee will resolve this problem very soon. As regards the infusion of equity or infusion of capital in the banks, yes, that's a crying need. The government had taken steps, and sometime in the beginning of this calendar year itself had announced a capital infusion program, which the government, I'm sure, is going to walk the talk and provide much needed capital adequacy in these public sector banks.
Right, good to know. Now, how can such an issue be avoided in the future so that we don't see such a repeat again? And in this regard, what is the new norm for relations between the RBI and the government?
See, how to resolve this issue? We have not far to look. We have to go back in history of RBI and central government relationship and see how similar situations, or probably more daunting situations, have been managed. Of course, we've had some RBI governors, right from Sir Osborne Smith, who resigned for differences between himself and the finance minister. But of recent past, I must say in the last, say about 50 odd years, we have not had a situation of that come about. Basically, it is left to the tact, the maturity and the deft handling of difficult situations between the two agencies, and I think all that is required is very frequent and close interactions between both the agencies, so that the fiscal authority and the monetary authority, if not totally on the same page, at times they are not, but at the least their differences can be narrowed down, which will be to the benefit of the economic growth of the country.
Right, good to know that, and I hope that these issues are resolved soon, so that India can get back on track with its capital markets.
Absolutely, and I'm hoping now that these issues have been resolved, we will get back onto the growth trajectory fast, that the banks will start advancing credit to industries which require them, and the banks which have been under the prompt corrective action framework will soon be out of it and will join the growth pattern.
Thank you, Mr. Rai. Thank you for sharing your thoughts with us today. Thank you, everyone.
Thank you. It was a pleasure.